Is medical cost sharing just a game of musical chairs? You know, where they run out of money and leave you standing all alone? We've all heard of the game musical chairs, and we all know how it ends. When the music stops, there's always one unlucky person left standing alone with no chair. Nobody wants to be that unlucky person left with a pile of medical bills and no money to pay for them. Is that potentially how it all ends with medical cost sharing too? The short answer is no, but let me show you how. Stick with me for the next few minutes while we put this fear to rest and prove once and for all that there is no more risk in relying on a medical cost-sharing community than there is with traditional health insurance. Hi, my name's Art Getz with the Health Benefits Network, where we give you the scoop on the latest ideas and innovations about health, healthcare, and health benefits that can make your life better. Now, I have to admit, I am no fan of traditional health insurance, and you don't have to look too far on this channel to hear how medical cost sharing eliminates the biggest objections that most people have with traditional health insurance. Before I discovered medical cost sharing, I'd always felt like health insurance had me over a barrel with network restrictions and big deductibles. And even with my employer paying part of the cost, it was still more than I wanted to spend on health insurance that I might only use once in a blue moon. The thing about health insurance is that it's only worth the investment if you have an occasion to use it. Otherwise, it's a pretty darn expensive peace of mind. At the same time, replacing health insurance with something so unconventional like medical cost sharing can feel a bit intimidating. I agree. But it only takes a little bit of research to understand and to know what you're getting into and if it's going to be right for you. You'll find a lot of resources on this channel, or click the link in the description below to learn more. Trust me, I get it. We all worry about getting hit with some sort of major medical crisis. You know, where the sicker you are, the bigger the pile of bills gets. So many bills that it's actually hard to keep track of them all. And the numbers are so unbelievably large that you have to laugh just to keep from crying. You couldn't possibly afford them all on your own. And then your medical cost sharing community comes up short on funds to pay the bills. Yikes! Could that possibly happen? Honestly, my spider sense was flashing bright red when I first started looking into medical cost sharing. I mean, come on, it was literally going to be half the cost of what I was paying for high deductible health insurance. And with no network restrictions, lower out-of-pocket risk, it sounded almost too good to be true. And you know what happens? That little voice just got louder and louder. If it sounds too good to be true, there's more homework to do. It's worth pointing out that this is a really big decision when you consider what's at stake. You're putting your health and your future finances in the basket and then counting on somebody else to carry it for you. There's a lot of eggs in one basket, and it comes down to a simple choice between a for-profit health insurance company or a community of like-minded people who all agree to pay in monthly and share each other's large medical bills. Either way, you're paying in advance for the promise of financial assistance in the future. When you take a look at how the cost-sharing model works, it works a lot like traditional health insurance does. They both collect a regular sum of money from lots of people. Both have rules and guidelines about how they'll use that big pile of money, and of course, what restrictions and limits you're going to have to accept. You know, things like network restrictions that are imposed by most health insurance companies, for example. Now, one key difference between the two is that only the insurance companies have shareholders who are investing expecting to make a profit on every claim they pay. This is one reason that medical cost sharing is so much less expensive than insurance, and why it's actually less likely to run out of money or increase the monthly rates. You know what they say, follow the money if you want to get to the truth. And finally, when it comes to running out of money, both insurance and medical cost sharing use very similar fixes to keep that from happening. When there is more money going out than money coming in, they both Simply raise the rates. So what really happens if too many people get sick all at once and there are not enough dollars to go around? The short answer is that a medical cost-sharing community does exactly the same as the health insurance company does when there are more claims than money. Cost-sharing communities and health insurance companies both rely on health statistics and group demographics to predict future claims and determine appropriate monthly rates in advance. And in either case, if you can't afford the rate increase, you can always cancel at any time and try another insurance company or a cost-sharing community, or just go it alone and save your money for a rainy day. When you buy health insurance, it's crystal clear that you're signing up with a company that makes a profit by taking on your health risks in exchange for the monthly premium. They set the premiums to make a profit. Plain and simple. But if health insurance companies were nonprofits, they'd be cost-sharing communities. So once you realize this, it eliminates any fears that you have about making the switch to a medical cost-sharing community. Eliminating the profit incentive allows a medical cost-sharing community to focus its resources on members getting the best prices for healthcare and paying their bills quickly. This practice has actually been proven to reduce the likelihood of large claims that result in higher monthly costs. This nonprofit orientation is how medical cost-sharing is able to preserve members' financial resources and keep monthly rates low. So the truth is, when you join the right medical cost-sharing community, the risk of running out of money is no different than it is with health insurance. Ultimately, the proof is in the numbers. So while the average health insurance premiums will increase by around 7 to 10% per year, the average increase for our non-faith-based medical cost-sharing communities is around 2%. That means that the cost of health insurance is increasing at 5 times the rate of medical cost-sharing. Using a strategy of no network restrictions and negotiating for quick cash payments with doctors and hospitals is actually working to hold down the rates. And ultimately, this shows up as rate stability year after year and highly reliable resources available to pay for every member's catastrophic medical need. Ever since I learned all of this about medical cost sharing, I just sleep better at night knowing I made the right choice for my family and me. Now, the real question for me is, why would anyone choose health insurance over medical cost sharing? Ever? We really do want to hear from you. Tell us about your health insurance horror stories. Leave your questions and your thoughts in the comment section below and we'll respond. We might even make a video to answer your question. To make sure you enjoy more videos like this, please subscribe to the channel. Click on that notification bell and we'll bring you more healthcare benefit news and stories like this. And don't forget, hit that like button. Share this video with your friends and colleagues because they have a health insurance problem too.